Good afternoon and welcome to the virtual home buying class brought to you by Obsidian Financial Services and OFSWillUpshaw, the loan originator. His NMLS number 826975. Thank you for taking the time out of your busy day to hear review and listen to some information regarding buying your first home or multiple homes. Brief background information on OFSWillUpshaw. He is currently licensed in Michigan, Colorado, and Florida, able to assist you in your loan process throughout the United States. He's been married for over 23 years. He has 4 children. He is a military veteran that served over 16 years in United States Air Force. He also has well over 2 decades of real estate experience working as a real estate agent, also loan origination. Before we get started, we want you to keep in mind that there is a lot of people out there that is paying more in rent than you would with a mortgage. So with that being said, let's watch this quick video, then after that OFSWillUpshaw will begin the presentation.
This spring, your house became a school, an office, a gym. You went to the movies in your living room, attended church in your backyard, video toasted your friends and coworkers during online happy hours, dance parties, and book clubs that turned into wine tastings. 2020 brought a lot of scary news. But somehow, by keeping us isolated, a pandemic accidentally brought us together. You learned how to give a haircut. Your kids discovered you're actually fun to hang out with. And you discovered that the view from your own window is actually pretty impressive. Home is everything. It keeps you safe. It keeps you centered. American Financial Network finances the American dream. Let us help see if you can make your home more affordable through refinancing or find you a great loan to buy a home that's all your own.
All right, thank you for staying with me here, and I hope you enjoyed the quick video. But again, my name is OFSWillUpshaw, so let's get into this here. The home buying process. There are some steps that we want to go over to make sure you understand the whole process of home buying. Also, some of the steps are when it comes to getting pre-qualified. I'm going to go in detail regarding that. Documents that you need to submit. Finding the right realtor. That is key and crucial. Without the right realtor, it make things a little difficult and tough for you. To help you go over some of the documents. Finding the right home. You want to make sure that home fits you, not something that you just want to rush into, but something that you can see yourself in between 5-10-year goal or whatever your long-term or your short-term goal is when it comes to home buying. You want to make the right offer. Not every offer is a good offer, so you want to make sure you make the right offer. Sometimes that offer could be lower than the asking price. Sometimes it could be above that. Sometimes it can be the terms, whether you want to be in the home, try to get in within 30 days or a little longer. So definitely want to make sure you do that. You want to lock in your rate. Also get a home inspected. You want to make sure you do that as well. Have an inspector go in. What they do is they advocate on your behalf because she's your inspector to make sure that the things are there, things are working condition that should be. Getting the home appraised. What they do is they tend to look over the entire value of the home, look at some comparables in the area, comparables, homes that recently sold, some on the market that's very similar to your home, to get the value of it. Picking your homeowner's insurance. You want to make sure that you get the home insured in case of natural disaster or something that goes wrong with it. When it comes to a natural disaster or flood or anything of that. Getting your home loan underwritten. That's what the lenders, they will underwrite it, making sure all the I's are dotted and the T's are crossed. And what's it like if you close with us? All right, next. Here we are, talking with a loan officer or a loan originator. This is the first step, or one of the first steps in the home buying process. If you reach out to a real estate agent right now, one of the things they may ask you after they go over some of your basic information and what you're looking for They may say, hey, did you get pre-qualified or pre-approved? If not, then you may want to reach out to a lender to get that. And what some of the things that they do is check your debt to income ratio. And what that is tell you how much debt you owe as a comparison to the income you're bringing in. And they also check your credit worthiness. Some of the things that they look at when it comes to the qualifications, they want to look at driver's license, state ID, passport, military IDs, things of that nature. Some government issued identification, social security card. Some cases they look at your W-2 for the past 2 years, pay stubs last 30 days, tax returns the last 2 years. These are some of the things that they're going to look for, some things they may ask for. So we want to make sure you just keep this in mind. And if you're a veteran, there's a veteran certification. So there's other different things for different loan in particulars, but these are the basic things that they would look for. One of the things is finding that right realtor. What that means is you want to have that realtor that meets you and matches your needs and your goals. And by doing that, they can help you find the right home. They're going to ask you questions as far as how many in your family, how many look to move in there. Just want to make sure you're not getting a 1-bedroom, 500 square foot home when you actually need a 3-bedroom basement. So those are the things that they're just going to ask you. And also they're going to be looking for these homes that meets what you're looking for, so it can be a perfect match. Once you find that home, once you find the one that matches you, with the assistance of a realtor, you're going to make that offer. And then once the offer is accepted, you will have to do what they call an earnest money deposit, or you may hear EMD. That can range anywhere from 1% to 3% on the loan, or even more than that, or the price, the purchase price, or even more than that. It really depends. So again, that's when you talk with your realtor, they'll let you know that. But what that earnest money is letting the seller know that you are serious, that you're looking to buy, but also that money can go towards your down payment or towards the closing costs. So it's not like you give a deposit and go towards nothing. It can go towards your closing costs or down payment. Now, once all this stuff is done and accepted, you'll supply your loan originator with a copy of your purchase agreement so it can lock in that interest rate. And that's key because the way things are, sometimes that interest rate will fluctuate depending on how the market is. So you want to make sure you want to lock it in so you're not being stuck with a higher interest rate if you don't want that. Next step will be getting your home inspected. That way you can identify things that could be an issue or problem with that home or with that property. You want to make sure you work with a realtor. If they know of some home inspectors that they worked with in the past, awesome, great, let's move forward. If not, they may refer you to a couple of, or you may have your own personal inspector. This is key and crucial to utilize. Some people forego it. Depends on the property. Whether it's a new built home, sometimes it comes with warranty, or maybe you purchase a home warranty. But in most cases, you would like to get that home inspected. They look for things in the wall, look for any flood damage, possible mold, sewer line, plumbing issues, the appliances coming with it, make sure they're working condition. They inspect the roof, the attic, insulation, things of that nature. In a lot of cases, you can use some things if it's not quite, in great condition. You can utilize that as a bargaining tool in your negotiation. But again, talk with your realtor about that. They can go more details. When it comes down to the appraisal, again, the home inspection is for you to get inspected to see if there's any issues or problems, looking under a hood like a maintenance check on a vehicle. With an appraiser, that almost determines the value of the property. And by doing that, what the appraiser does is they come in, typically sent out by the lender. They will come in, they will look at the home, they look at the countertop, they look at the condition, they look at the flooring, they want to look at it to see how it stacks up or compares against other homes in the market that recently sold or that's currently on the market. Want to give you that value. Check out the square footage. If things have been updated for bathrooms and kitchens or roofs, including maybe furnace, things like that, that can determine the value of your home. Not every home is created equal. And that's one thing you realize. And not every home is created equal, but what the appraisal does is come with the value of the property. In some cases, appraisal waiver can be issued. And what that is it will forego the appraisal process. And as far as that, a person coming out to inspect it and to do a data and stats with what's going on to give you an evaluation. That can happen. Just keep that in mind too as well. Next thing you would like to do is reach out and contact homeowners insurance to get a quote. Once you get that quote, that will typically cover the amount you wanted to have insurance to cover the home if for some reason it was completely torn down and rebuilt. After looking, in some cases, they will place your personal belongings with inside too as well. So that could be your homeowner insurance, your renter's insurance, or any insurance company that you look at or you reach out to. So that's not a problem there. Or if you don't have anyone, you can always ask your realtor or Google as well for some homeowner insurance companies out there. Then from there, your loan is going to be finishing in the underwriting process. Again, they making sure all the T's are crossed, all the I's are dotted, making sure you are who you say you are. They're verifying your bank statements, they're verifying your pay stubs, they're verifying all this information, just again to make sure that when they create this file and issue this loan, that it's all correct and there's no issues or problems or concerns. And just keep in mind, there may be some things that they didn't ask for in the beginning that later on may come up that they may ask for. So be patient. Be patient with your realtor. Be patient with your loan officer. There's some things that they may have missed where the underwriters may take a little deeper dive into it to see is this something that may or may not be needed. All right, now let's come with the good part, the good information here, the stuff that you really was here to see, closing along with us. One of the biggest things we like to do is make sure we close on time. Also, let you know, a perfect score is not required to work with us. The biggest thing I would like to tell you as well, I'm on your side. I'm advocating for you and make sure you get the best product, the best pricing that we can possibly do for you here. Also, our experience. I'm very experienced, been around for over 25 years. I've been in business for over 15 years, so we're definitely very experienced there for you. And constant communication. Communicate with you through the whole process of the loan from start to finish. I have a portal where it would track and send out little notifications on every step of the loan here. So again, you're constantly getting information from us and from myself, letting you know, hey, where you are, what's needed. And that's one of the biggest things you want to make sure you're aware of too. And you want to make sure you have a loan officer that's in constant communication, not only with you, but also with your realtor too as well. Because our focus is to make sure your loan is ready to close right on time. And when I mentioned about the credit scores, with FHA and VA, you can close as low as 560 FICO, and in some cases 500, but it really depends on your profile. So that's why I said it's 560. Conventional as low as 620, and with VA, when it comes to the FICO, I know they have programs that can go 560, but they also 100% can do them at 580, and that's one of the biggest things that you want to realize too as well. We work alongside you as a partner, not a pussy salesman, not trying to force you into anything. Again, from start to finish, I work with you and talk with you, go over each information and just see where you are in the process and what your thoughts are. Because again, it's your decision. I'm just here to help you along, guide you, and can direct you in pathways that can best benefit you. And definitely will keep in touch with you throughout the whole process of the loan as well. All right, some of the top questions that first-time home buyers wish they would have asked, and that's one of the reasons why this home buying seminar is out here, because there are some questions out there that you may not know to ask. So here are some of the top ones. What is a mortgage? You know, I know it may sound a little like mortgage. Yeah, let's think for your house, but some people may not know or be aware of what it is. It's just a legal agreement between you and the lender which pledges the home as security for the loan. And another thing here, your financing options. If you're paying for cash, you don't have to worry about it. But if you are looking to take out a loan, there's different ways. Conventional is available through a guaranteed private lender with two government-sponsored enterprises. Again, sponsored, so they're not government agencies. They're sponsored by the government. That means the government sends them money, and they sometimes will purchase loans from them. That's Fannie Mae and Freddie Mac. Now, with Fannie Mae, Freddie Mac, it's typically anywhere as low as 3% down, and anywhere between, if you don't put what they call a total of 20% down, where you're paying down the mortgage and upfront, there will be a thing called PMI, that's private mortgage insurance, or MIP, mortgage insurance premium. It's pretty much the same thing. That's saying where it's to ensure that if something was to go wrong and you wasn't able to finish paying or making the payments, that the government will step in and insure the lender for the rest. FHA is a type of government-backed or government-insured mortgage on a loan. It can allow for a little bit looser financial requirements. In that case, down payment is anywhere between 3 to 3.5%. They also have, if you put less than 20% down, MIP or mortgage insurance premium on that product as well. Now, VA, this is a VA backed for veterans, administration backed home loans. It can help veterans and service members, and also their survivors. In those cases, you come in with 0% down, and there's no mortgage insurance premium or PMI for that, but there is a funding fee, and that funding fee can be anywhere between 1.6 to 2.3% of the loan amount, depending on how much you're looking to put down. With USDA is for rural areas, farmland, home buyers. There's no mortgage insurance premium and PMI on that as well. With that one, it's a 1% guarantee fee that you pay up front, or you can wrap it in a loan. But again, there's no MIP mortgage insurance premium for that product either. And then there's also renovations and new construction. You can get that on conventional, VA, FHA, in case it's USD, saying that if there's some things that need to be touched up or worked on your primary residence, you can utilize some of this extra funds or renovation for your property too as well. So again, it gives you a wide range of different options that can help get you into the home that you're looking for. Now, one of the things you definitely want to realize, you cannot believe everything you see online. Not all mortgage loans and rates are the same, so there's a lot of different things that factor into that. And one of the biggest things that you may see a quote saying 2% APR, interest rate 3%, 4%, 5%, whatever the case. That's online. And in some cases, oh wow, that's awesome. But one of the things that you gotta think about, or starting to think about, is there's a lot of things that factor into that. Or it's the loan amount, it's the loan type, it's the terms. There's a 15-year, 10-year, 20-year, 25-year. Loan amortization is there. What it means is, are they factoring the loan interest rate throughout the whole 360 months or 30 years, or is it they only factor in that loan or interest rate amount for 10 years or 15 years? Is it a purchase or is it a refi? What's the loan of value? How much they're looking to loan, the value of the loan, combined loan to value. That's if there's a second lien on the property, the location, the time, the property condition. If it's your home, primary residence, is it a second home or is it an investment home? Credit score. So there's a lot of different factors that come into the interest rate and the online quote. So if one of the things is, if the lender or the person giving you the quote, if they're not taking in consideration of all these factors, you may not have an accurate quote. So you want to make sure they go over all of this stuff here too. Now, how are pre-qualifications and pre-approval different? Or you may be aware, you get some in the mail saying you pre-qualify. And in some cases, you may reach out and say, hey, since I'm pre-qualified, let's move forward. And then they ask you some more detailed questions, say, oh, no, unfortunately not. Or I know it's set for $5,000, but you're only for $1,000. Pre-qualifying there's no paperwork, there's no obligation. It's just a ballpark figure. A lot of times that's to get you to call in or just to try to get your business without going into detail. Now, a pre-approval goes in a little bit more detail. When they collect some of the required documents, they verify your assets and credit and give you a definite idea of what you can afford. But again, it takes a little more time, and yet you will have to provide some of your information for this to go through. They can give you a quote or qualification, but it may not be accurate unless this information is requested from you and you provide it. I hope that helped that out. Now, what is a credit score and how do we use it? We use the 3 credit bureaus, one of the biggest things. And I know it may sound basic, but it is definitely a numerical representation of your credit history. What lenders do, what we do, we use the scores as a way to determine your risk factor. Higher your risk loans, maybe higher interest rate, and then lower risk. And I know some people say, well, that's not fair because, hey, if my score is already low, you give me a higher rate, it's going to make it worse or it's going to hurt more. And we understand that. But unfortunately, that's just the way it operates. Because the lender is taking a risk. If it's a higher interest rate, that means your score is a little lower. That means there may be some challenges or some hiccups in your credit history. But again, if you're able to get into a home, that's still better. Whether your interest rate is 7 or 8%, for a home ownership where you own a home, it's a lot better than 100% interest rate when you're renting. Because when you're renting, 100% of everything you're paying goes directly to the person you're renting from, the property management company, or the landlord, and you may get your security deposit back. That's about it. So definitely look at home ownership is a lot better option for you as far as building up what you want to do, having your own, building up equity into your own property. Here's some things that you can do to improve your credit score. They're based on several different things. Now, 15% is your credit history. That's one thing some people may not be aware of, may not understand. That 15% of your overall is your credit history. Now, 10% of that is like your types of different credit that you utilize. That means whether it's a credit card, a cell phone, a card, things like that. 35% is a big chunk, and that is your credit history, your payment history. That's your payment history. So when you may have one late payment, and since it's 35%, it affects more than if you had several different credit cards or several different things. So that's one thing to definitely take into consideration. Also, if you had inquiries, it's 10%. Where that if you do late payments, that hits your credit worse. Also, what to look at is outstanding debt. Having that outstanding debt definitely impacts too, as well as what you owe. So I may not be aware of when they say you want to have 10% credit card utilization or debt utilization. That means if you have $100 credit limit on your card, you only will be nice to you only keep it under $10. I know it sounds small, but that's the thing. If you max it out or get close to max, their lenders may be looking at as well, this person they don't have that much income or don't know how to manage money. So you want to try to keep it as close to that between 10 to 30% utilization. Okay. Now, how you can find out information about your credit report. Every year you can get a free annual credit report. And that's one of the biggest things there that you can do. Every year you can go by law, and it doesn't affect you, it doesn't hurt you negatively. You can get the free credit report. Now, I know there's different sites out there, but the best one that I've utilized so far and used so far is the annualcreditreport.com. This is where you can get that free credit report. You look at it so you could take it where now you can pay for the other ones. But the ones that's information you may want to verify or double check several times is the free ones, like the Credit Karmas. Even if you're paying for like the Credit Karmas or the Credit Gurus and things like that, that's out there. Sesame, Credit Sesame. Some of that stuff may be accurate, some may not be. So you definitely want to make sure you verify with the annual credit report. Now, one of the things is choosing the best loan program. You may not be aware of, because there's hundreds and hundreds of different programs out there. So what happens is when you can ask these questions yourself, and also when you speak with a loan originator or loan officer, they're going to ask you a couple of questions, like what are you looking to do? Are your finances looking to change? How long you plan on living in this property, or how long you plan on renting out the property if it's a rental investment? Are you comfortable with the idea of changing mortgage payment amounts? Well, that's different between adjustable rate and fixed rate. Also, when do you want to be mortgage or debt free? So all these things factor in different programs that you're looking for. Also, if you had military experience, medical doctor, hospital, medical experience, first responder, police officer. So there's a lot of different programs out there that could assist you. So that's why, again, speaking with someone so they can ask these questions is definitely your best bet. Discount points. One of the things people want to know, what is a discount point? I keep hearing about that buying down rate. What does that really mean? Now, with discount points, their fees paid directly to the lender at closing in exchange for a reduced interest rate. Now, if you may have seen online on TV, I know the rates have been going up a little bit, but again, this has been around for a while. So, if a person says, "Hey, I see that you offer a 3% interest rate," and I said, "What is available?" Right now, as is, the interest rate that we can offer you is a 5%. But if you want that 2% interest or a 3% interest rate, you have to pay discount points. And that could be 2 points or 3 points. Now, what that means is it costs 2 points or 2% of the loan amount to get it down to that interest rate you're looking for. So if it's $100,000 loan amount and 2% of that, that's $2,000 to pay to get down to that interest rate. Now that could be benefit over the long span of the loan, or may not. If you have the money and it may work for you, great. If you don't, do not. So sometimes it, as I mentioned to you before, paying down the interest rate or having certain things or certain questions, it's great to speak with the loan originator to be able to go through this. And then from there, you can determine if you want to move forward with it, and over the span of the loan, it makes sense to you, you can move forward. If it doesn't, and that extra 2% can stay in your pocket, then let's move that way as well too. Again, the whole point of this is, and the whole point of speaking with the qualified, experienced loan originator is not to force you into anything. Is to have a conversation with you and weigh the pros and cons and see which one works best. Loan to value. This is one that people want to know. They have questions about, and what the loan to value is the amount of money that you borrow when it goes up or compared to the purchase price is expressed as a percentage. One of the quickest or easiest way I like to tell people, if a lender say, hey, they can only give you 80% loan to value, 97%, 96, whatever. If they say that, hey, we can only give you 80% loan to value of the property.
So that means if your property that you're looking to purchase is $100,000, that the lender will only provide $80,000, which means you will have to come up with that $20,000 as a down payment. So you put the loan amount at the top, $80,000, and the property value is $100,000, and that will give you that loan to value of 80%. Now let's move on to the next step here for you in this process.
Now, what's included in your monthly mortgage payment? This is a question that people always ask. They say, hey, I only want to pay $1,000 a month. Okay. Now, what a good loan originator would do, they will ask you some more in-depth questions saying, okay, is that the total amount you want to pay all together, or is that just your mortgage And people say, well, isn't that the same? Since 2010 or 11, there have been some laws that came out, and one of the biggest things is when the lenders back then, before the market crash, there was a lot of lenders that was allowing home buyers to pay their homeowners insurance and property tax separately than their mortgage payment. So sometimes they may pay their mortgage, but if they don't pay their property taxes or homeowners insurance, the home can still be foreclosed on. So since then, I say maybe 95, 96, even maybe higher than that, of all lenders want to have the property tax as well as the homeowners insurance included in the total payment. So there's some things that when you speak with the lender, if they don't bring it up, you can ask them, say, hey, does that include the property tax or the mortgage insurance? And homeowners, is all that included? That will let you know if, again, they're more experienced or they're just trying to give you the lower number just to do business. And again, that's where it can make the home buying process very frustrating when you say, well, you told me only $500. And they say, well, I had to include the property taxes, I had to include the homeowners insurance. So these are the things that's all included. And a lot of times you may hear as your PD payment. That's property tax, your interest rate, your principal, as well as the insurance. That's what they call a PD payment. And in some cases, your mortgage insurance, if you have a program where it's needed. Now, all those payments, once you add them all up together, that equals the amount that you're looking to pay. Now, if that equals that $1,000, then that's great. But keep in mind, that can reduce the loan amount and we can reduce the type of property by. If the max is 1,000, and with all those numbers included, you want to meet 1,000. Just keep that in mind. Escrow. You may hear escrow. What is escrow? Escrow, what that is because of that property taxes, as well as the homeowner's insurance is included in the mortgage company holds that. They hold that money until it's time to pay those bills. That way, you don't have to worry about it, because it's, again, you're paying your mortgage and they're collecting it, so they're holding it. And typically, the lender will collect a 1/12 of the annual insurance each month. Also, when it comes to the bill, they'll pay that. Now, depending on what state you're in and how your taxes are collected, sometimes your taxes are collected and paid out twice a year. Sometimes it's only paid out once. Again, depending on your location. But keep in mind, and that's one of the benefits of having this escrow. If the lender, let's say your property tax went down, or homeowner's insurance went down, and if the lender collects too much, they don't keep that money. By law, they have to give it back to you. So if you see your property taxes went down, but the lender's still collecting a certain amount, sure, definitely send them that information so you know. In a lot of cases, they will find out when they go to reach out to the county or the city, or whoever collects your taxes, and they see that, oh, we collected 4,000, but it's only 3. They only going to send that county or city that 3,000, and they will send you that refunded amount as well as overage. By law, they have to send it to you, so you can rest assured that it's getting paid the right amount, and if there's any overage, you will get that back. What is mortgage insurance? As I mentioned before, is when it comes to that mortgage insurance premium, if you paid less than 20% down, or that private mortgage insurance, depending on whether it's a FHA product or a conventional product. Again, as I mentioned, it protects the lender if you fail to pay your mortgage, which no one's going to do that on this call here. And it usually requires if you put less than 20% down. There are many different options that will fit your needs. So it's not just one company, it's a lot of different companies out there. So a lot of times what the lender would do is try to get the best rate, the best company, because they're just like with anything out there. There are some companies that's not that good that charge you a lot of money, and it's really not worth it. So a lot of times the lender will look for the one that's gonna fit what you're looking for in your budget. Closing costs. This is one topic that people tend not to think about, or when they hear about, oh, I only need 3% down, and you hear it all the time. I hear it all the time. Oh, a person can buy a $100,000 home for only $3,000. No. There is a thing called closing costs. Closing costs consist of a variety of different expenses that's above the purchase price of the property. The fees to the lender, attorney, title search, title insurance, taxes, upfront housing expenses such as homeowners insurance. Sometimes the lender will collect what they call upfront property tax. Sometimes it could be 2, 3, 6 months in advance. A lot of times they do that depending on when you close, to make sure that there's 1 or 2 payments in there before you have to start paying. So there's a lot of different things that come to that. And when it comes to the fees, whether it's the lender fees, or attorney fees, or title search fees. So all these things are included in the closing costs. And it can be anywhere between 3% to 7% of the loan amount. The details of that, a lender or a loan officer can estimate how much they may be. But until they actually get the property and start doing the numbers and working through, that's when they'll know or have a more accurate estimate. So again, keep in mind, if someone ever said, hey, you only got $100,000 home, all you need is $3,000. No, you're gonna need more than that. So just keep in mind, you're gonna need more than that, and it's called closing costs. Now, whether that can be gifted to you by a family member, you can do that. Is it gonna be credited? A credit that can cover that? That's possible. Even a seller's contribution. They can give you seller concessions, down payment assistance. So these are a lot of things that can help cover that, but just keep in mind, it's not just the 3% down. Okay? If you keep that in mind, that there's other costs and fees, then you know you need a little bit more money. Again, you can get it from other different areas, but you definitely will need a little bit more money to close on loan. All right, what happens when you apply for a loan? One of the things here that the lender works to verify all your information on the loan application. They also order the appraisal to verify the value of the home. The title work is ordered. Make sure that there's review that you have a clear title, that there's not any issues. Make sure that there's no one else that's have claim to the property, or there's other loans or liens on the property. So that's what the title work does. So it's not, I'm paying these people just to look it up. No, they're looking up some different things on it to make sure that once you purchase the home, that it be free and clear with you being the owner of it. Now, once all is collected and approved by the lender, submit everything to the underwriters, and the underwriters just verify everything as well to make sure everything is good to go on it. And once it is approved, then we can schedule your closing there. Now, during this, what responsibilities do you have during the lender's process? The key, remember to keep in mind, your financial circumstances need to stay steady. So no quitting jobs, switching jobs, doing less hours. Those things can affect your loan. So just keep that in mind too. These are things that some people don't think about. Oh, I'm about to buy a home, so let me go get furniture. You don't want to do that yet. Okay. You don't want to go buy a car. You don't want to take out any other loans, any other financial obligations. Don't fall behind on any of your credit card bills or anything like that. Bank accounts, if you transfer a lot of money back and forth, when they verify your bank statement, they want to make sure that you don't have any financial obligation that's not on your credit report. So if they see large sums of money constantly moving around, they say, well, what is that? Is that a loan? Where you get it from? So those are things, I don't know, you may sound a little intrusive, but think about it this way. If you're, trying to buy a home or trying to buy something, and instead of the lender seeing that you only owe $100 a month, it come to find out that you moving these large sums, you took out 2 or 3 loans, or you owe another financial obligation of $8,000. So that can definitely affect if you're able to qualify for this. So that's why what I said, tell everyone, try to leave everything in the bank that you're utilizing, and just have some type of paper trail. If you are, for instance, some people get income tax back. If it's put in there, just leave it. Just put it in there and note that this is my income tax. And if they say, well, let's look at this and let's have, where did it come from? Just have some type of paper trail. Well, I transferred from one bank to another bank. They would like to see that. So that's all I'm saying. Okay. Some people say, well, I'm about to buy a house, so I'm going to stop paying rent. Don't want to do that, because that can definitely affect your credit report. Some report to credit agency, and that may come to you being sued in court. So you don't want to do that. Don't go out there looking for new credit. Don't sign or co-sign for anyone. Now, I understand some people may have kids, and they want to, co-sign for a car or student loans. Student loans is one thing we understand. Sometimes you have to go to school. You may not be able to put that off. But co-sign for a house or a a loan for your kids or someone else, you might want to hold off on that. I'm not saying do not do it. I'm just saying you might want to hold off on that until everything is solidified here, because it could jeopardize you getting a loan. As I mentioned before, making large deposits. If you're looking to make large deposit withdrawal, if you're just not sure, in a lot of cases, large deposits can be anywhere from $300 to $500, just depending on what your income is. But again, if you're not sure, please reach out to your loan officer before it starts happening. And don't omit any debts or liabilities. If there's something out there, a debt or something like that, let your loan officer know, and then we'll go from there. Again, it may not be nothing, but again, it's best to speak with your loan officer first before you think, well, I'm just not gonna say anything and let them find it. So again, some could be just as simple as just a letter of explanation saying what is this about and where is it from. Can definitely cover everything there for you. I hope that cleared up a lot of stuff there. Take a picture of this if you need to, just to keep in mind what not to do when you apply for a mortgage. What you should look forward to walkthrough. Now, the walkthrough is the time where you got scheduled for close and you want to walk through the house for that final inspection. Again, your realtor will go in more details with you about this. I just want to touch on it there for you. You examine every corner of the house. Again, this should be empty at this point, unless again you have something with the lender and with the seller that give them some time to be at home. Whatever you decide with your realtor, but this is one of the things here. You want to check floor to ceiling. Be sure the seller fix any issues or problems that they promised to fix. Make sure everything is just as it was when you previously looked at it. For instance, if they say that if you first went and viewed the home, you put the offer, if it had stainless steel Samsung appliances, looked like they were brand new, or look in pretty decent condition. When you go in there, if they're missing and they're supposed to come with the house, or if you go in there if they're different ones. Again, your realtor will go in more details with you, but just some of the things that you look out for when you're doing that final walkthrough. What can you expect on closing day? Either you can wire the money, the down payment, or you may bring in a certified check. You can check with the title company, check with the lender before the day, so you'll know exactly how things are done. Again, you want to make sure that you verify it. And since there has been some fraud out there, you want to actually have a conversation with the title company. If there's emails that get sent that look like it's from the title company, forward it to them. Say, hey, did you send me this? Forward it to your realtor. Forward it to your lender. Say, hey, was it sent to me? Trust me, we don't mind. It's not like you're bothering us. We understand stuff like this happen. Things get hacked. So if you get something and you're just not sure, forward it to us. Forward it to us and ask us. Call us, ask us. We're here to help you. We're here to walk through this with you and make it as simple and easy as possible. Now, the day of closing, there's a lot of documents. A lot of times you get the documents a day or two before. Make sure you review them and read them. If you have a question about it, call your realtor, call your loan officer, and we'll help you, read them with you, sit down with you, and go over any questions. Again, it's not like you're bothering us. You're not. If you're not sure, we're here to help. That's what we're here to do. Okay, and then you grab your keys and enjoy your new home. Now, to go back, some of the steps that you need to do to secure that new loan. Provide a clear copy of your photo ID, a clear copy of Social Security card, passport. Also, last 2 years of tax returns, all schedules, last 2 years of W-2s or 1099s. 2 recent bank statements, all pages. If it says at the bottom 1 through 5, you need to see 1 through 5. Even if the fifth one or fourth one said intentionally left blank or blank, we still need to see all 5 pages. Copy of your DD-214 and certificate of eligibility for VA loans. Executed purchase agreement, pay stub. Now, these are the basics. Now, there may be some other things. If you owe child support, if you owe student loans, if you had something that was incorrect on your credit report and you got that cleared up, if you file bankruptcy, if you foreclosure, a lot of different extra documents, but these are some of the basic documents that you would need there. Now, excuse me. Now here's something that I go over with you, as I mentioned before, that rent versus owning, and your rent costs. If this is your rent every month, this is what you're paying every month. This is what's happening every month, and in 10 years, this is how much you totally paid in 10 years. Now, how much of that you will get if your rent was $1,000? Maybe your security deposit was $1,000. Security deposit, you may get that $1,000 back at the end of 10 years. Now, if you own that property, if you own that home for 10 years, and as you see here, in 2012 it was $250,000. Now it's worth $700,000, and you go to sell it. This is the equity that you built up into that home. So again, you get maybe a $500 to $1,000 back as a renter, as opposed to as a home buyer. So let that sink in for a little bit. Any questions? Okay, hold on. Let me see if I pull up a question here. Okay. One of the questions is, I see that if you purchased a home with FHA, it says, and you want to move out. Okay, hold on, let me read this. You purchased a home with the FHA with 3.5% down, but you want to buy another home somewhere else, but keep that one. What do? You just buy the other home somewhere else. I mean, if you want to keep this one and either you use it as a second home, or if you want to use it as an investment home, that's two different options, two different ways to go. Let's say you want to use it as a second home. You can do that. But keep in mind, when you go to do that and buy that second home, the lender is going to look at both of the homes, both of the properties, and both of the mortgages that you pay on, and make sure your income can cover that. If your income covers that, no problem. No problem. The other option is if you want to use that as an investment home. It's possible you can do that as well. And there's options where the lender may look at it and say, hey, how much is the rent in this area? If the rent is $1,500 and you're only paying $900, that's what they call a debt coverage service ratio. If it covers that, boom, that's fine. They'll look at it at that income that you'll be getting. That's extra income that can go towards your income that you're already earning and still qualify you for that other home. So there's definitely some options there too. And that's a great option to do. That's what some people have done that. And a lot of people have done that. They buy a home in one area and they go move to another area and they keep that home and use that first home as a rental. So that's paying off their mortgage, plus putting some extra money in their pocket. All right, any other questions? All right. Well, again, thank you for taking the time to speak with me today, to meet with me, to go over some of this information. I hope it's something that you take from it. Hope it's something that you can learn from it. And again, I'm here to assist you. I'm here to help. My contact information is right there again, so you can take a picture of it. Let me know if there's anything that I can do to assist with you. Go in more details about anything. My job is here to assist. My job is here to educate. My job is here to help. All right, this is how you can find me. Connect with me on social media. This is my Facebook. It's OFSWillUpshaw. My IG. Also, YouTube is Living in Detroit. And this is going to be put up on my YouTube channel. So if you want to check that out, go back and look at it again. I'm here to help, here to assist, here to answer any questions. Thank you for taking the time to speak with me here. One of the things I like to say, one of my biggest sayings, that an educated mind is the best mind. So the more you learn, the better and educated you are. And that's the best way to go when you're out, not only in the home buying process, but also in the way of life. Keep learning. I'm here to help. Feel free to reach out. Thank you. Have a great